Alrighty, what's going on, everybody? It's Monday, 7 p.m., September 21st. I'm going to do an analysis about Bitcoin and just overall the market in general for Advantage members only. And we're going to talk about, first thing, the private analysis that I did September 4th. As y'all can see, played out pretty perfectly, right? So if you watch this video, it's only about 4 minutes long. If you watch the video, you'll see one thing that came true almost to the T, which was when we were dropping right around this area, we talked about price potentially bouncing back towards that 50 moving average and up in this area. If we start seeing weakness around here, which we definitely did, we started closing out our rune position, our link position, our dot position. Most of those were in profit. I think Link was at a small 9 or 10% loss. We're still holding on to some positions in the altcoin space, and I'm not feeling too confident about them. But I'm also kind of looking at the market thinking, okay, let's see if we see continuation of bleeding in terms of price on Bitcoin to the downside. Because the one thing that I saw today, especially in the S&P 500, was I wasn't quite happy with the close of the candle today, right? Most of the day, I mean, we bled down. We had a big gap down candle right at the open. And then we kind of grinded back up most of the day, right? And so this movement back up with the way this daily candle printed, I wasn't quite happy about that. Now, here's the thing. I think the bigger picture shows me that there are structural signs that have broken this trend. First of all, we broke outside of this channel that you could see on the S&P 500. We broke below this moving average, which is the 50 moving average. It's a key moving average in the S&P 500 that price typically respects on a daily basis. And, obviously we broke pretty far below that. And same thing with Bitcoin, right? We talked about Bitcoin, even over the weekend. I told y'all that there was pretty good opportunities being seen. First things first, I was talking about this area Friday when I said, we're probably creating this triangle. I'm looking for a target of about $11,300. Unfortunately, price was front run by the bears right around 11,150 or so, and we got sold off, right? And then what happened was when we came back down, what I basically saw was the potential of this area being an SFP and possibly returning back towards 11,000. And that also happened. But then we came back into a particular area, which was this marker, as y'all can see. It was the intersection where price met two specific trend lines. I find these kinds of situations pretty nice for a short opportunity because there's a reason why price comes back in time and value wise in terms of price level, why it meets these particular trend lines. It's because price is trying to find a strong area of resistance or supply that it can break through. And if it can't, well, then that means that supply is about to take over and we got sent down, as you can see. So this all happened overnight pretty much, and we started breaking down, right around early morning as well. So I think where we are right now is, we broke below the pivot pretty strongly, right? Again, this is a new weekly pivot, and we're finding support on the S1. Even while we were breaking, I stated that there's a possibility that we find support right here. And if we do, which is again, this trend line that you could see, if we do, we should be returning back towards 10,800. But if we break that, we're probably heading to about 10,200 and some change. And I think I wrote that somewhere around here. And I don't know, some other analysis that I did in the morning time. I think the morning video had that. So we're basically, bouncing off the 10,250 support, the S1 support. And I stated that there's a couple of different paths that price could take. I think I posted that in Bitcoin chat right here. Okay, so y'all could see right here, right? I'm seeing three different paths laid out. The green path is, basically from here, where we are right now is, 10.3 or 10.2. We bounce up, maybe get to 10.5, and if we get rejected, we'll probably break down further. But if we keep going up, chances are we're probably going to go to about $10,800, which is this key, support level, right? So it's basically the same idea of, well, this was, support right here. We broke it. Now, can we test that area as resistance and then start breaking down? Sometimes when price is really weak, it doesn't even reach up that high, okay? All it does is, it does a very small retracement and then it starts rolling back down. It really depends on how weak the price is, how the market is going to open tomorrow, or what kind of, bleeding will happen overnight in the futures markets in the US, right? From the macro perspective, I think I'm looking at the market as, this was definitely a good sign. I think we came back to 10,250, but I think for my bigger scenario, which is, this red box of us breaking down further, I think we definitely need to start, breaking 10,000, the 10,000 psychological level. If we don't, like I said, I think we're probably going to do this, green marker thing, maybe back towards $10,800, and then possibly roll back over, okay? Which if we hit 10,800, there's also this red scenario where we come back and tap it as resistance, and then we start breaking down. I also stated that the highest probability I'm thinking right now is the red path, which is we make it back up a little bit, maybe towards, 10.6, 10.8, and then roll back down. The second highest probability is black, which is, from here, where we are right now, is we kind of chop around here sideways, and we just break this support level and start heading down, making our way towards this key support, which is $9,800. All this is completely dependent on what the heck happens in futures tonight, how the DXY looks. I mean, we can even pull up the DXY right now. It kind of opened with a pretty massive rip up, right? See if I can pull that up real quick. Let's see here. Yeah, so y'all could see, the DXY put in a pretty massive bullish engulfing candle. It basically engulfed the last, 2 weeks or so, 2 trading weeks rather, with this particular candle. So the DXY was not messing around today. Equities markets were not messing around today. Pretty much everything came to the perfect classical, one-to-one correlation, meaning Bitcoin is positively correlated with the equity markets and Bitcoin and gold and silver are all negatively correlated with DXY. So it was like the perfect storm, if you will. So I think where I am right now is I don't know if we're going to start just ripping straight down from here. Like I said, I think we might consolidate around this area. And if we don't break above, so here's how I'm seeing this, okay? If we consolidate around this area and, we stay here long enough, I think chances are we're going to go down. If we do something like this and we start breaking above 10,584, which is a key SR level on the daily basis, if we do that, then I think chances are we're getting towards this 10,800 marker, okay? So I think, again, right now, I think it's one level at a time, right? If you're finding support and you want to scalp this, well, your stop could be just below this area, and your first target could be 10,584. Your second target could be 10,800 and some change. If you don't want to scalp and you're kind of swing trading like I am, I've pretty much held my swing short for the last, like almost a week and a half, 2 weeks. And I don't have any reason or purpose to close it right now, okay? The only point at which I would start closing it is if we start maybe getting up here and we start, consolidating above this trend line or something, then I'm concerned. But my Bitcoin short is still technically a hedge. It has not become a full-blown position where I'm only trading that. I'm the reason I have that position active right now is I'm trying to reduce my risk and my exposure in terms of my losses that I'm incurring with my altcoin positions. Okay, so I think my average is like 10.6 or 10.7 on my Bitcoin short. And so far, I'm making decent money on my short, but I'm not going to say that, all right, all is clear. We're going to start breaking down, bull market is done. I'm not going to say that yet because, to be honest, the bears have completely effed this up multiple times. And I don't have faith in the bears until I actually see follow through, right? There's numerous factors from the fundamental standpoint, from the Fed standpoint, and from the technical standpoint that you can make an argument and say, well, maybe this was really a trap right here and we could start going back up. And I'm more inclined to believe that nowadays because of how aggressive the bulls have been in every sell-off that has happened. And so I don't want to underestimate the bulls until I see bears really step up to the plate and put the bulls in the ground, which, again, the way you do that is, okay, you made a big drop. You consolidated here for a good week, week and a half. You broke through the 50 moving average, right? Next step, you retrace back up a little bit and then start rolling over. Or, maybe even tomorrow itself, just start breaking down. That is how you show conviction as a bear to every single buyer who thinks about buying the dip, right in these kinds of candles right here, or this kind of consolidation that you're seeing right here. You need to put them to rest by forcing the market down. And then you can only do that if you have enough conviction, enough supply, and enough sell pressure in the market. And to be honest, like I said, I don't know if that's true yet, right? We have to actually start breaking structural levels on the way down. And I think structural levels, first thing being, we have to break this 128 moving average on the way down, which is $10,200. Okay, that's right around that area. So as soon as you start seeing a daily close right here, okay, below this 128 moving average, I would say with pretty high confidence that we're probably headed towards these levels right here. Okay, we're probably headed towards $9,450, $9,100, $8,800, or maybe even as low as $8,200. But again, I don't want to count out the bulls just yet because they've been incredibly strong pretty much this entire run up. And even right now, right, there is this whole argument, again, in the US with Congress potentially not passing stimulus. There's a whole battle between the Senate appointing a new Supreme Court judge versus Congress telling them, well, you can't do that unless there's a new president coming up. And so we're going to hold back stimulus. It's just a political shit show, really. But political shit shows almost always impact markets, okay? Especially with the election coming up. I don't know if the Republicans or the current incumbent president wants to risk the market potentially selling off because let's be real, the market was clearly overextended to the upside. And the only way you could keep it elevated to the upside is you start printing more free money, you start putting in that stimulus package. You basically need to give the market what it wants, which is the fix, the drug, if you will, which is free money. And until those talks resume of stimulus and free money, I think the market could potentially break down further. But I don't think, either the Republicans or the administration, the Trump administration would want that because that would be detrimental, right? I mean, you don't want an already struggling economy with now a stock market that's breaking down 20, 30, 40% from the highs. So this is why I'm looking at the market, from the fundamental standpoint and thinking, okay, well, something's got to give, right? Either the incumbent president and the administration step up to the plate, and they maybe work out a deal to pass stimulus, or if the stimulus doesn't pass, I am fairly certain that we should start heading down further. And where would we head down further? Well, on the S&P 500, the one level that I like to look at is the 200 moving average on the daily time frame, okay, which from where we are right now is, I think, another 5 or 7% down. Yeah, so about 5.6, 6% ish, right? A 6% drawdown in the S&P index is almost 15-ish percent drawdown in Bitcoin prices. Again, this is just my general relative math of how I compare numbers with. If the S&P 500 sells off say 1%, I'm generally thinking Bitcoin sells off about 2 times that, or maybe 2.25 times that. Okay, and same thing to the upside, in my opinion. So let's just say the S&P 500 starts breaking down under 6%. So that means we should be expecting another 10 to 15% sell-off. That takes us to our 8,800 level, right? What is around $8,800? Well, we have the S3 pivot right here. We have this EQ of this previous range right here, right around that area. And then of course we have the yearly VWAP and the 200 moving average. So there are many reasons for me to think that if we start breaking down, I think the S&P 500 could hit this 200 moving average, which is again 6% down, which means Bitcoin should make it towards that $8,800 level. It's possible that we have an aggressive sell-off because Bitcoin is a risk-on asset, right? And it's a higher beta, meaning relatively higher risk asset than equities. So it might have a bigger pierce down, like you might have a bigger sell-off, like way the heck down towards 8,000, but maybe it recovers itself towards 8,800 with a deep wick, right? But personally, that's really the area that I'm thinking about. Now, how does that fare for altcoins? So I spoke about this in the morning video, right? I talked about, again, first thing, Link. There's a reason why we let go of Link way the heck up here, right around like, mid $11 or wherever the heck it was. And, we saw another almost 20-ish% sell-off, right? We now have broken a key trend line right here, as you can see, a multi-month, actually, what is that? March through September. So that's almost 6 months, 6 months of a trend line we broke through. So typically when you break through a trend line, there might be some, comeback and some mean reversion. Bulls are going to try to force this thing back up and try to see if we can break the trend line. Maybe start getting rejected. Then we're looking at, a couple levels. First one being the $7 level, and then second one being this $5 level way the heck down here. Okay. I don't see any other real support nearby. I mean, we've already broken through a key structural support level. We should technically be bouncing where we are right now. But if we don't, and we do something like this kind of number, well, then, like I said, $7 is next, and then probably 5. The one thing that I talked about Link, breaking down was its association with how Bitcoin can be seen as, maybe following the risky altcoins, meaning if Link, Ethereum, Litecoin, even some of the DeFi coins are starting to break down, and that means that there's really no strong bid in the market, right? There's two things that can happen. Either Bitcoin really steps up to the plate and sucks in a lot of the money flows that are coming in, and it starts taking off, leaving behind all these altcoins, or these altcoins are indicating that Bitcoin has still not bottomed. That means it's probably going down further. Personally, I think the latter scenario is much more likely, which is I think the altcoins are signaling that, hey, we've pretty much entered a deeper correction, a mini bear market, if you will. And as long as I'm not seeing a bid, I'm not seeing buyers step up, me as altcoins, I'm going to keep going down. Okay. And that means I think Bitcoin is probably going to follow. So, and obviously, like I said, there's numerous cases to be made why Bitcoin could potentially start breaking down, which is the case for equities potentially seeing weakness in the market and breaking down. And that's not only on a technical basis, but like I explained, it's also on a fundamental basis of what's happening in the political sphere and talks about stimulus, and of course the talks about, how the market was overextended. All these things are kind of coming to a point of culmination where you get to see how sentiment kind of shifts. And when sentiment shifts, most people are pretty late to catch up on that shift because most people are really caught up in buy the dip mode. Things are still bullish. And that's really how retail typically is they're late to the party, right? But at least us in the Advantage community, we've been well aware of the market being a little bit more overextended. We talked about once this sell-off happened to the downside, once we broke 10.5, we talked about the potential mean reversion coming back up, being a little bit careful, starting to de-risk positions. I hope some of y'all did. I don't know if every person listened to me, but I've literally been talking about this analysis since the beginning of September. So no one should have an excuse of not, seeing this thing play out as it has so far, because I've been, pretty much been on repeat about it. Are there any questions, by the way? I feel like I'm rambling. Any questions so far? Anything specific I can answer? Okay, so there's now a few different ways to look at it, right? So I had, I think 2 or 3 members over the weekend and even today, message me about assets like DOT or Link or Rune, the assets that they like and that they want to buy. And they're asking me, well, is this a good place to buy? This depends on your time horizon. Think of it this way, okay? Let's just say you didn't buy up here, right? Or let's just say you did, right? You bought at $19. You're now getting a discounted rate for Link at 54% discount. So if you believe in Link, okay, you shouldn't just keep wishing that, all right, I think Link's gonna go down to 7 and 5 like Amol says, or maybe it might go to $3, maybe it might go to 1. See, don't fall into that trap, okay? Because my time horizon of trading might be different than yours. You guys know me that, excuse me, when it comes to altcoins, excuse me guys, when it comes to altcoins, I trade the cycles and momentum that we're in. I generally don't want to look too far into the future of, hey, I think I'm going to hold this thing for 1 year, 5 years, etc. I don't care because I think the crypto space has shown us over and over again that it's not capable of that. Okay, especially with new coins, let's just say like Link or DOT, which again are my favorite projects. I've been watching Link and Tezos for almost a good 1.5 years, 2 years. Yet I still don't want to, I guess, fall into the trap like we did in 2017 and 2018, thinking, all right, well, maybe some of these coins will have a purpose. But the point is that, yeah, they might have a purpose, but that doesn't mean that they can't be down, another 60, 70, 80% from where they are. And then that might be their intrinsic value. So the question is, are you willing to sort of suffer through those losses for potential, longer term gains, where you might see that come to fruition 6 months from now, 1 year from now, or 1.5 years from now? If not, then stay away, because look, the technical is already showing you that we breached, a key trend line support right here, as you can see. That Bitcoin is looking weak. The stock market is looking weak. I mean, everything that you should be looking at for the signs of strength or for the signs of comfort or hope are already telling you that, hey, the market is not in a full-on bull mode. It's now in correction territory. It's now in pullback territory. It's now in mini bull market territory. Okay, so what you need to be looking for is, okay, well, what is your time horizon? If your time horizon is that, hey, I want to scalp this thing, I want to see the best, risk to reward trades possible. Well, I just showed you one, right? I just showed you that the best risk to reward trade right now is get long right here, stops below this S1 right here, and start targeting 10.5 and 10.8. Okay, Link, Link's a little tough. I don't think this is a trading opportunity, but Link might do something like this where it taps into this trend line and then starts breaking down. That's your short. Stop over here, start targeting $7 and $5. Those would be your scalp trades, okay? Don't worry about the direction of the market. Don't think that you always have to go long on altcoins, okay? There's a reason why exchanges allow you to short, right? So just focus on the technicals right now and what the market is trying to show you, all right? What else do y'all have in terms of questions? Anything else I can answer? Let me see here. Okay. Well, I don't know. I think that pretty much wraps it up, guys. You know, again, if you go on our website, folks, if you go to the products page, we have that Shepherd indicator. For the Advantage members, again, this is there's a 30% discount for this indicator, and Shepherd indicator technically is a suite of indicators, meaning there's 3 separate indicators. There's this one right here, which is the swing alerts indicator. The second one is this one right here, which is a moving average based indicator. Swing, this one right here, is a Ichimoku cloud based indicator. And then the third one is the actual Shepherd indicator, which is an RSI divergence based indicator. So you get all 3 of these for the price of $100 a month. Well, actually, no. For Advantage members, it's 30% off, so $70 a month. And we're going to, work on the prices. We're going to try to reduce those. But for now, that's what they're priced at. I've been using the indicators, and they are pretty spot on. They are. Let me show y'all real quick, right? So, first of all, there's a few different indicators that signaled, this area, as y'all can see, the red ribbons. This is the moving average based indicator. This signaled an area of resistance. Again, price moved sideways over here, could not break above, could not hold above this red ribbon, and then we started selling off. So that was technically your area to sell or short, okay? Now, the second indicator, which is showing you a signal, which is a swing bear signal that we're seeing right now, which it basically indicates that you should now be going swing short, okay? And again, that's what that indicator is indicating to you right now, right? And the last time we had a swing bear signal, obviously, as y'all can see, we had this big candle down. Now, obviously, let me see here, where exactly the swing bear signal. I guess it was on the big down candle, so that doesn't really help. But I think, this signal right now is pretty helpful in my opinion. So let's see, let's see how the swing bear signal plays out, right? This will sort of lend credibility and give credence to us using these indicators more. And then the Shepherd right here at the bottom, it's kind of indicating to you that, maybe a low was formed right here. So maybe if we don't take out the low in the coming days, right? And this blue line that you see, the signal line, if it doesn't cross back under and make this area right here, as you can see, pink like this, that means that it's possible that maybe we're reversing back up. So all these indicators are right now signaling to you that we've definitely come to a local top. Now it's a matter of, okay, how do we bottom here? Do we start selling off going into tomorrow, the rest of the week, or do we start reversing back up? So that remains to be seen, right? Is the Shepherd indicator 70 a month? Yeah, so all 3 of these, the indicators that I just showed you, all 3 of them you get for $70, okay? So, and again, that's only for Advantage members. For people outside the Advantage community, it's $100, all right? All right, guys. Well, that's pretty much it. I think that's all I have for y'all. I hope this analysis was helpful. Please do go watch this private analysis video. You can check it out. It's only a 4-minute long video, but we pretty much nailed this, spot on, right? That's what we do. All right, y'all take care. Cheers, and I'll catch up with you tomorrow.